Well, good afternoon. Good afternoon and welcome to another of our Webinar Wednesdays, Managing Your Small Business Beyond the Pandemic. This is number 72 in our series. Good afternoon, my name's Kelly Bearden. I'm the host today, and I have a special guest that I'll introduce in a little while. A lot to go over today, some great changes that are happening in the forgiveness and EIDL areas, and just a lot of things. So let's get rolling. July 28th, 2021. Well, what's new today is, hey, the Olympics are on TV. And not too many people are watching, which is kind of sad. It's kind of a whole sad situation, isn't it? You have athletes that had to work out, train another year. Some got a year older. Some got a year older that were young, and it was actually a benefit, as we're finding out. But the Olympics are on, and it's exciting. And not real excited in Tokyo, but more to come on that. But the Olympics are on. The Olympics are appeared to be a big financial bust for Japan, maybe to the tune of $20 billion, where they hope to showcase Tokyo and a rebuilt Japan as, you know, a great economic push coming from that part of the world, but it hasn't turned out that way. So the Olympics are on, and you can find them pretty much on TV all day and all night. Don't know what happened today. I guess I'll find out tonight. So big changes. Big changes are now are looming for PPP forgiveness. We have a new process that is being introduced as we speak today by SBA. We'll go over that new PPP process, which just 2 weeks ago or so when we went over this stuff, has changed potentially dramatically for those that are 150 and less. So also EIDL changes. We have changes with the economic injury disaster loan. And moving forward, they're still backed up, but they've made some significant headways. SBA yesterday came out and mentioned a lot of the things that have changed. A lot of the things moving forward, processes, more personnel, we'll talk about that. Interesting note that I picked up this week, gymnasiums, your gym, your local gym is now making a push for some type of government funding similar to the shuttered venues and the restaurant revitalization type programs. Might be a little late for that, but I see where several gyms are making a big push with online signups or actually online signing a petition to petition your local or state national officials in order to try to make some relief for gyms. And, you know, I signed it because, you know, gyms, I think, suffered a lot, and they were closed a significant amount of time. Fortunately, for those that were capitalized, they could actually withstand it. Many of them couldn't, and you know, really, you know, we've done shuttered venues, we've done comedy stores, we've done theaters, we've done restaurants and caterers and bars. So, you know, maybe you're a little late to the game, Jim, but it's worth a shot. Our shuttered venue grant is still open. So we're happy to report that shuttered venues are still being able to apply. And that would be your museums and the aforementioned any type of entertainment club. That meets some pretty serious and rigid rules, but those that are actually able to apply right now, the application process is down to a matter of days. So if you think you could apply, but you're worried that you might not apply and be successful with that application, go ahead and do it. You're really not out anything except a few hours of your time. So today, hey, we got a local business banker to the rescue. That's right. Bill Jeffries will join us in a little bit and talk about a lot of things that are on the minds of small businesses. We'll get to the relief programs, more of those relief programs, the new additions, some of your questions for today, and also our poll. So there they are, your poll questions for today. So just moving a little bit forward, we have a few questions that are tied again to the NFIB, the National Federation of Independent Business. And they're tied to basically their June 30th most recent poll, which they have conducted throughout the pandemic. I believe this is about their 18th such poll. They change a little bit. A couple of these questions are kind of retreads, but I think given the fact that time has moved on, maybe these are more relevant for your business. So let's start with number one. It has to do with supply chain and supply chain disruptions. And as we launch the poll, are supply chain disruptions impacting your business? It could be significantly, it could be moderately impacting your business, a mild impact on the business, or no impact at all. So give you a few moments to vote on this, and I will actually write this down so we can compare. So what we're doing is we're getting about 58% of you that have voted. And again, on supply chain disruptions impacting your business, significantly, moderate, mild impact, or no impact at all. So with about 62% of you in, what we're going to do is we're going to close this poll and end it and share the results with you. And look at that. 31% is moderate. So moderate is 31%, 26% is a mild impact, 29% no impact at all, and 14% significant. Okay, great. Well, thank you for number one. We'll compare that with the national poll in just a few moments. So our second question today is going to be another retread that we talked about, and that is kind of the shortage of employees that people are experiencing. So launching our second poll question, is your business currently experiencing a staffing shortage? And is it significant, moderate, mild, or no shortage at all? So is your business currently experiencing a little bit of a problem finding good quality employees to move on, or even employees? Forget about the quality. Let's go with quantity here. So you're jumping way out there with 63% of you that have already voted. Are you experiencing a significant, moderate, a mild, or no employee staffing shortage? And with about 65% of you in, let's go ahead and end the poll and share the results with you. And poll question number two, happy to report that no shortage, 33%. Not so happy that 25% of you have a significant and also a mild. And then 17% of you have a moderate shortage. Okay, great. Thank you. And we'll move on to our last poll question, which is tied to this one. And this one has to do with if you did experience, and this is probably not for you 33% that had no shortage, but if you did have a shortage, those of you, are you finding that owners of the business are working more hours because of being short-staffed? And so that is either a yes or a no, or it could be a does not apply. But if you are experiencing short staff, are the owners working more hours? Okay. Got about 56% of you in. Realize this is going to be a little bit less. We've got our 60% threshold, so I'm going to go ahead and end the poll. Give you a last second to get in. We'll end it, and we'll share the results with you and find that, yes, 62% of the business owners are working more hours compared to 12% no. Okay? So we will stop sharing that particular poll. You know, it's interesting that when we look at kind of what has happened with the national polls, and we'll start with this last one as I hop around a little bit here. Number three, nationally, 79% yes, compared to 62% locally, and 12% no. And the amount of applicables, about half for the ones in the national level. So 79% compared to 62%. So locally, I guess our owners aren't working more hours because of the short staffing, or as much. Moving on to our second poll question was, if you're experiencing no shortage at all, was almost 40%, 39%, where we were at 33%, so relatively close. 21% said they had a mild shortage. On a national poll, we had 25%. And then moderate was about the same, 18 to 17%, and significant about the same, 25% compared to 22. So yeah, pretty close on our national poll as far as the staffing crisis that I guess is going on across the country, and it's felt about the same here. And our last question was supply disruptions. And we had 14% of you with significant supply chain disruptions compared to 32% nationally. 31 moderate locally, 33 nationally, 26 mild, and we had far more no impacts with 29%. So that's how we kind of stack up nationally to a couple of the big issues going on with supply chain and staffing shortages. Okay, look what's back, the question of the day. You hit me with a really good question that I can kind of sanitize and not let anybody know who this is regarding. I'm for this. And I got this question just a little bit ago, and I think it's timely and it's appropriate because we had talked a little bit about one of the loan originators for PPP, one of the fintech companies called Wombly. And I think that's spelled right there. But Wombly was doing basically a fintech, and they were initiating or originating the loans. And then what they would do is they would sell them to a particular borrower. It could have been a small bank or someone else. So I remember that we did have a couple of questions at the time from people, or statements or in the chat, where they had mentioned that they applied through this particular source and they were asked to apply for both a PPP 1 and 2 at the same time. And I remember commenting back there, it's on one of the last 71s or more, maybe even more than one of them, that generally you have to have a PPP 1 and go through at least a covered period of 8 weeks before you can go after a PPP 2. So this kind of caught my interest when this question came in, of which they know of several individuals who applied through Wombly, and they had them apply for a first draw and a second draw PPP. And oftentimes that second PPP would come back declined. My guess would be because the bank would say, hey, there's no covered period there. So one individual was approved by Wombly for 41666, which is PPP 1 and PPP 2, which is the $20,888, which is ironically sole proprietor, no employee, maximum. So, and remember the laws changed back on March the 5th when President Biden allowed you to use gross receipts, your actual gross profit, rather than just your net income. And if that was over 100,000, you would qualify for this very 20,888. So they reached out to SBA, and SBA did not have a record of a submission. So the E-Trans was not submitted. It sounds like they were declined on all of them because they weren't, but it sounds like the loans were originally originated. And the borrower thought they were getting a PPP 1 or 2, according to this question of the day. So I'm not even going to ask or answer the question if they have a lawsuit. But moving to scenario B, is Wombly secured a PPP 1 loan with a lender and maybe has not released the funds on record. So any suggestions? And so I'm talking to everybody out there, I guess, today. If anybody has suggestions, since we are kind of a Webinar Wednesday community, and I don't have tremendous insight on what this has happened and what has happened with Wombly, but no access to customer service. Their phone number has been changed. I do know that they were actually at the origination source for one of the top 10 PPP lenders, and maybe that's a place where we can go and find more. So if anybody can help me provide any guidance on this, if anybody used Wombly and had any other experience, why don't you put that in the chat? Remember to keep it non-personal and sanitize it, and we will actually look at this toward the end. So that is the FinTech Wombly and some of the experiences that some of the people that listen to this webinar are experiencing. Okay, quickly, let's do a new share, and let's go, maybe we can jump into Chrome here and look at some of the SBA data and maybe try to figure out through the PPP data here. Do have a number of loans that have not been forgiven, and here the program reports. Here's the last report. Let's go ahead and open that up and just kind of look to see if we can go into and get, if we can still access the top 10 lenders through the Paycheck Protection Program. And this was back on May 31st. And there's our top 10 lenders, top 15. So I do recall that I think Wombly was being serviced by one of these small banks, because I kind of Googled them earlier. I don't know if it's still on the internet, but it seems like it was one of these in kind of the middle, these middle four, Capital Plus, Harvest, Cross River. They could have been the originator, and unfortunately, what they were doing was they were buying Wombly's loans that they were bringing them. So, you know, maybe that's kind of where you could start to look and try to look to see who was actually funding. And it could have been everybody on that list, who knows? But maybe that's a source. And maybe when we get our guest speaker on with his banking experience, he might be able to shed some light on this as well. So you see, by loans approved, a huge amount in the 400,000s for these very small lenders, some of them a CDFI, excuse me, others very small lenders that you really haven't probably heard much of. I know number 7, Stria is the biz lender online. So it wouldn't be them, but these others, it could have been potentially, they took a lot of the paper that Wombly did. So if anybody had any experience, we'll try to get some answers for you and try to figure it out. And that's our question of the day. Okay, moving on with Paycheck Protection. We did look at kind of some of the data on forgiveness, and we can look at that. Let's look at EIDL really quickly while we're in here. And so go to the EIDL information. And we're going to be talking about EIDL in just a little bit. So there is some information. This first one is on the actual EIDL loans approved that you see is over $3.8 million, or $3.8 million in loans. That's $228 billion. And we have some other news that EIDL might be increasing today. So it appears that there's plenty of EIDL money available. Again, $228 billion since the program started. They break it out regionally. They also down here break out some of the other products. Here you have the targeted EIDL advance, and if I recall, there was about $30 billion budgeted for the targeted EIDL advance. Maybe it was 15. But so far only at about $2.5 billion. So that might increase substantially, but it seems like there's going to be some unspent monies in this targeted EIDL advance fund, and maybe that will be absorbed by the supplemental targeted advance that has come out after. So a little bit of EIDL information, both on the targeted. Let's see if there's some supplemental information out yet. And there it is, about $1.1 billion, 225,000 of these loans that have been made directly by SBA in just the matter of the last few months. Okay, so that's our EIDL update for kind of what has been done EIDL-wise. Let me go back to the slides and get into why this is all important. And just give a quick summary today of something that we do most frequently on here is talk about the status and action of key stimulus programs. You know the shuttered venue grant is open, the portal is open, and you can go there. You know that employee retention tax credit is open for both 2020 and also for 2021. It ends the end of this year. You know the EIDL loan is open to the end of this year, the end of 2021, and you can request an increase, and we'll show you what's been going on with a lot of those increases and kind of a response that SBA had yesterday for some of the customer service and some of the customer or actual processing inefficiencies they were experiencing. The EIDL advance from last year is closed. The targeted EIDL is open along with the supplemental. That is generally triggered by SBA, and you must be in a low income area to receive both the targeted and supplemental advance, the 2021 version. The family leave tax credit is open. The Bakersfield Loan to Grant program is open. See our friends at Access Plus Capital. PPP forgiveness is open, and it is still due to 10 months from the end of your covered period, but we have a lot to go over on that today to change that. Your PPP, of course, is closed for first and second draws, as is the Restaurant Revitalization Program, closed to applications for the California Relief Grant, and still maybe some funding still coming from the California Relief Grant Program. Okay, we introduced these EIDL changes that were new for 2021. This is a slide, if you've been around for a while on this webinar, that you've seen. I'll show you a few more that you have not seen today and some changes that are going on and changes that are being considered. So earlier back in, I believe around April, maybe late March, the EIDL maximum loan increased from a maximum of 150 to 500,000. That is an application process that really flooded the SBA with actual reconsiderations for larger loan increases. And really has kind of been a little bit of the problem as they continue to weed through and get caught up on those. So a little history on the increase of the EIDL loan. Disaster loans typically can go up to, historically anyway, up to $2 million. When the first EIDL loans were made back in probably mid-March, mid to late March of 2020, they were for $500,000. Shortly after, SBA realized, or Congress realized, somebody did, that they were going to run out of money fast, and they reduced it to $350,000, of which we had some clients receive the $350,000 max. Some got the $500,000 max. And then probably about 4 or 5 weeks into this, around the middle part of April, it went down to $150,000, where it remained until April or late March of this year. So having the opportunity to request an increase from that 150 up to 500 has really made the EIDL program extremely popular. And as you see by this, let's start at the last bullet for a change. The good news is SBA expects that it's 600,000 plus backlog to be cleared by mid-August. That's right, at one time they had a backlog of 600,000 EIDL increases. Also, with people jumping into the program for the first time, get more awareness and more outreach out there, that 600,000 increase has now already been halved down to 300,000, and it's expected to be cleared out by mid-August. So SBA was able to actually improve their processing, and they did this with new processes and more personnel, and kind of accelerated the average number of loan decisions. I know Bill will appreciate this. The average number of loan decisions made by an SBA underwriter on the EIDL Advance program was less than 2 loans per day. That is nearly 4 hours in order to process 1 loan. And that has increased to, I believe, somewhere around 14 or 15 per day for these individuals. So that was a process, and that was a major change in how the loans were underwritten as to how that occurred. That wasn't morale, that wasn't anything else other than changes that had to be made in order to get this process and this program working again. So the dramatic improvement also reflected as the program transitions from the disaster assistance to the Office of Capital Access. So I don't know if that changed much in the actual productivity. I would really think it would take something major as far as some of the issues that they had that they don't want to tell me. And that's fine. So this brings us to kind of some news that's been lingering out there for a little while. And that is, will the EIDL increase go from $500,000 to $2 million? And the official word I got yesterday was that it has been announced that it's under consideration, and there is an operational under review process going on. So more on that later. So that is what we have on EIDL. We have a process that looks like, and this is going to benefit, I think, many of you that have had issues not only with EIDL increases, but with new EIDLs, with the targeted process where they were having problems getting their certified tax returns from the IRS for one reason or another, or whatever the reason might have been. But there were some months that people had applied and were still trying to get these things processed. The good news is it looks like things are getting back under control. And maybe it's like what we saw with the shuttered venues, that there were so many applications that first day, and a complex program that took, several weeks, a couple of months to actually get through that process and to get through that backlog. And now it's a process that happens in a matter of days. And there's what you can do to request an increase in your EIDL loan. You go to COVID increase request at sba.gov, send them an email, and do not request from over the 500,000 to 2 million. That is not yet actual policy. So we do not know if that's going to actually happen, but it is having a lot of discussion and kind of shows some of the opportunities that are out there. And really, for a lot of the really larger small businesses, 150 did nothing for them or did very little if they were significantly impacted by the disaster. So that's kind of what's happening with EIDL. We've got some big changes for PPP. As SBA announced today, they have a new initiative aimed at encouraging borrowers with less than $150,000 PPP, either first or second draws, to actually begin the process through their SBA portal. So this is different than what I've been telling you since day one of PPP forgiveness, that the process is controlled by the lender. And actually it is still controlled by the lender because lenders need to opt into this program. I believe this program, and looking at it, was intended for credit unions and smaller processors, smaller banks that jumped on. Remember, the SBA had about 1,700 lenders nationwide. When PPP came out, that jumped well over 5,000. And I think by last count, there were like 5,400 lenders that participated in the PPP loans. So many of them, unlike larger banks that had something or a process that they were going with forgiveness, really were going to go through kind of a really kind of inefficient, from a productivity standpoint, of dealing with lenders on a one-on-one basis. If your lender opts in, the process will go back to you. It goes back to the borrower, who will then log on to the SBA portal and do the actual forgiveness process themselves. So of that, it covers about 90% of the loans that are out there that are unforgiven. Over 6.5 million of them are 150,000 and less. So SBA has notified the banks. They had a webinar that was designed for banks yesterday that they were gracious enough to allow me to sit in on. So I got to get this information that they were going to release today, and it's about, again, driven by the banks. The bank is going to opt in. And if the bank does opt in, you will receive notification that you go to this particular portal. And I think that we've seen with SBA portals, they've been really user-friendly. The Restaurant Revitalization Fund took people about 15 or 20 minutes. The Shuttered Venue Grant was a little bit more detailed and more cumbersome, but we saw the EIDL program change and the EIDL loan come down to about 3 or 4 screens. It was a lot easier. So the portal process is pretty simple and straightforward, and I think that most borrowers will not have much of a problem. But of course, your local SBDC will be there to help those if you do have any questions. So what does this do? It allows both first and second draws. And then what happens is after you put in the required information, what it'll do is it'll pre-populate. So once you put in your information, maybe it's your name or your employer ID number, your social security number, it could be your SBA loan number, it'll pre-populate with information that SBA has. Your first step will be to verify that information if your lender is using this particular process. It will then, after you go through, it will basically print out the equivalent of a 3508 form. And then the platform will notify your lender when you apply, and your lender will go in and review, check your calculations, and then issues their forgiveness decision to SBA, which is either yes, no, or something else. But it's usually yes, but it could be no on the forgiveness based on the information that you've provided. So this is called direct forgiveness. It's a new process, and it's really kind of under the hopes. SBA said yesterday what they want to do is they want the government, they want lenders, and they want borrowers to be done with this process by the end of fall. And this is a pretty seamless way to do it by having, a borrower will go in, but they even added another tool. So in addition to having that tool particular for you, we're going to go over this next tool in just a second. So again, remember, you'll have to apply directly with your lender if the following does not happen. Your lender does not opt into this process. This is a process that your lender has to say, yes, we're going to do this. We're going to use their portal. Many lenders I've talked to were very excited about it, not wanting to have to go through the particular process. Maybe some already have it up and going and will want to stick with their own. So we'll have to wait and see. It depends on whatever your lender is going to go with. Again, your loan cannot be greater than $150,000. If your data that you have does not agree with the information provided by SBA in that portal, then what you need to do is you need to back out and you need to go through your lender. And also, if there's been any changes, like a change of ownership during the process, or for any other reason the platform rejects you as a borrower in the SBA forgiveness portal, then you will need to go through your lender. So with that, SBA has come up with another program, and let me set this up for you real quickly. And it's just basically that, SBA on people that did not actually provide their documentation that they had a 25% drop in any quarter. They've come up with a new way to score this to where you'll put in some information and they'll base it off of current information, off of economic recovery and return to business status. And again, this is for loans under $150,000. Then they will have an optional way of scoring this to where you will not have to provide that information. So rather than have to pull your quarterly information, they will look at this particular process. You can go in. I haven't seen what it is or what it does, but they do say that they use current data on economic recovery and also what it's going to take for a return of business to operational status. You'll provide some information, and if not, then you will need to submit proof that you had a 25% drop in any quarter in 2020 from 2019. Remember, you needed that 25% reduction in order to justify a second draw. So again, this is only for the second draw. It's not applicable to the first draw. But there is a COVID revenue reduction score program now, which is an alternative method that can make it even streamline the process even easier for you. And again, here's kind of the timeline that we have gone through. One thing that now that we're getting up to when individuals, your timeline, your 10-month window from your covered period is coming up. One thing that I should probably explain a little clearer is that it will not prevent you from getting forgiveness if you are late on that, but you will have to start making payments. And I have not heard anything if you're going to get those payments back if you have 100% forgiveness. So the payments will start coming, and then the invoice will start coming that you have a payment due based on the amount of your loan that's not forgiven. So that is one thing that is a little bit, probably needed a little bit more explanation. So with that, it's time to bring in our guest speaker today. And that is going to be Mr. Bill Jeffries. And as my PowerPoint freezes up, it's a pretty good time to do that. It just makes me have to give an introduction for Bill that I don't have anything to read. So the king of hacking introductions is at it again. You know, Bill Jeffries, he retired recently from Citizens Business Bank, and it was really beneficial when he was there at the early stage of the PPP, because I know Bill was working nights and weekends. And while he was working nights and weekends in order to get those first batch of PPP, when everybody thought there was going to be a limited amount of money and everybody was really, really running scared, he actually provided a lot of input on actually what was happening and what not happening. So, you know, with that really kind of came the background from where Bill really came, and he really came from helping small businesses and in economic development. And now he's moved on and he calls himself retired. I got news for him. He's going to probably be working more now retired than he has when he was, or semi-retired than when he was working. He's now an entrepreneur. He is now working as a financial advisor with the SBDC and helping us with a lot of our clients. And as I continue to weed through this, this mess I have, we'll continue to share what we have on the screen and introduce Mr. Bill Jeffries. Bill, take it away.
Thank you, Kelly. Slide in here. Well, good afternoon. It's great to be on the 72nd Wednesday webinars with Kelly. I want to first congratulate him and other guest speakers over the past 72 sessions, or 71, that I was referring my clients to go to these Wednesday webinars, because Kelly had some very current information. It was constantly changing with the PPP and EIDL, with the forms and what counted, what didn't count. Kelly has shown in the past a lot of screenshots on his business, and it was very valuable for that information. I will comment that Kelly mentioned this Wombly, this online portal. I know at the very beginning, a lot of banks were working with different fintech companies to have their portal to do the submission of the PPP loans. Part of what I did was do kind of the basic write-up or underwriting. And a lot of times we were needing to get more information from the client to have a full package so you get your full funding. And then with the, I left and retired at almost the end of October. So the forgiveness program was going then. So hopefully you're keeping good documentation that you need for that total forgiveness of that package of your loans. I think it's been a great lifeline for us, a lot of community businesses here in Bakersfield, Kern County, and Inyo and Mono County. So I encourage you to continue to listen to these webinars and refer it to other business owners here. As for that Wombly, maybe there was a second glitch on the submission in a portal, or something just didn't process through. Sometimes data doesn't get transmitted properly, and it's out there somewhere in the web portal somewhere, or it could be in a Dropbox that it just didn't it didn't go through for whatever reason. So I'll be anxious to see how that comes out. Today I have no slides. I'm going to talk because I've been doing some consulting and an honor to be a part of the CSU Bakersfield SBDC team, along with my own entrepreneur work and volunteer with the local chambers. I want to talk about a little bit about your credit score, preparing a personal financial statement, the necessity of having business tax returns, personal tax returns, your business plan, which there's a software called Life Plan that the SBDC has available for those that need consulting, and just talk about some miscellaneous resources. The last week I've been pulling resources and I found some real interesting things that I want to share with you. And I've got a limited amount of time, so let me get started. Back when I started in banking back in the late 1970s, I haven't been in banking consistently, but I've touched the last 5 decades. So there's the basic 5 C's of credit. And we're going to talk about character. What's the character of the borrower? What's your credit worthiness? What's your credit score? And we've been using credit scores for a long time. There may be some changes in that with another company as announced in the Wall Street Journal that's an alternative for lenders to use. Second is capacity. What is your debt to income ratio? Again, you may have personal debt. If you're an existing business, what is your business debt? How do you restructure things sometimes? Maybe your loan is not structured properly for the needs of the business. Third is capital. How much money do you, as the owner, your skin in the game? Because generally, a lender is not going to loan you 100% of what you need when they have no control of management, and they don't want to control the business. They don't want to have to take back any assets from a small business. Collateral. What is the collateral? Is it brick and mortar building? Is it inventory? Is it receivables? What is that collateral? The conditions of the loan. When you're applying for a loan, what is the purpose and use of the funds? The bank needs to know that. Very basic. It's like, okay, we're loaning this money. And again, we're doing our due diligence to underwrite this, so we don't want to make bad loans and that are bad to you and bad to the bank. Last thing we want to have to do is foreclose on a property, take away your inventory, whatever that UCC filing has on it. So that's the 5 C's of credits. And you can go on to Google and pull these up for future reference. Like I say, I have no slides, so just take notes. For FICO score, again, in the Wall Street Journal just had an article about 53 million adults had their FICO scores pulled just in this past year. And they're using it mainly for the consumer side of it, but as a startup, and that's what I'm working a lot with right now through the SBDC is the startup companies. Well, what is your credit personally? And a lot of them are sole props. Some of them may be forming an LLC. So there's a few different structures, but again, it's basically a solo operation that I'm working with right now on the consults. This new program is called Vantage Score, VANTAGESCORE. So you might want to Google and check out. That's something new that some financial institutions are starting to use. I will say this, over the past 71 weeks, I've tried to look at almost a third of them while I was working full-time to when I'd retired. And Eddie Palmore gave a great presentation on Access Plus Capital, and it was involved with the nano loan application from loans 5 to 20,000. It was credit score based, used as credit score base, and it would reduce the amount with the lower the score. So if you haven't looked at that or did not hear that presentation for a small business, it's not for startups. And I specifically asked that question in the Q of A. So it's not for startups. The other thing that I found is just this past week of consulting with someone was buying some equipment for their business. And I will tell you that this is called the Small Business Financing Program. It has affordable options to help California businesses shrink their energy bills and carbon footprint. So who has this posted to look at? Well, I found it on PG&E, who is my power provider at home. but also San Diego Gas and Electric, Southern Cal Edison, and Southern Cal Gas. So I would, if you are a customer of those, you can receive and you're fewer than 100 employees and your revenue is less than 50 million. Again, a lot of small businesses. Go to their websites, and what could be financed? Appliances, heating and cooling, industrial, agriculture, data centers, food service, lighting, more efficient lighting possibly, pools, refrigeration, water heating, and other projects. And it talks about the Energy Star. But I think there's some businesses that are, having to remodel, or they're going to be leasing, or they're already in a lease and they need to upgrade their equipment, more energy efficient. Check out their websites at the various energy companies that you do business with. Other resources that I've come across along with that, if you look at the state of California's website, there's a large group of listings of different, if you're a hairstylist or barber, there's a section in there. So if you've got a specific business and it's regulated by the state, you need to go to the state website. I also highly recommend that you use the SBA.gov website for a startup or you're an existing business. There is a large amount of resources on that website, as well as the CSUB SBDC. You can go back and look at these webinars that Kelly and his team have put together. I encourage you to use those resources, but SBA.gov, again, business plan, marketing plan, and I'm going to put a plug in for our local Chamber of Commerce's. Even if you're a startup, you might want to look at the local chambers to see which is a fit for you. And this covers, there's chambers all throughout Kern County, Inyo, and Mono County. Check in your backyard first. Who do you do business with? And as I told one customer or client this earlier this week, it's like, okay, do you know the local businesses that surround where you're opening up your business? How are you going to network? Maybe that DBA is something you ought to check into here in Bakersfield. It's the local businesses here downtown. And the other chambers, the Kern County Hispanic Chamber of Commerce, the Greater Bakersfield Chamber of Commerce, North of the River Chamber of Commerce, the Black Chamber of Commerce of Kern County. All great chambers to get involved with if that's your fit. Kern EDC has a good website. Those are for maybe existing businesses and outreaching. I'll be honest, for my business to business, I network on LinkedIn. I find that as a very valuable resource, not only here in California, but throughout the United States. And I've made some great connections from resources that I've done my due diligence and says, I want them to look at my product and make a connection. And a lot of them are willing to do that. Again, if you're looking to build your business in Shafter, Delano, Ridgecrest, go through their local city websites, the city of Bakersfield, and the program that Kelly mentioned earlier today, a great resource on what they offer if your business is in the city limits. And I usually ask that question as part of my intro meeting by phone or by a webinar. It says, where's your business jurisdiction? City limits or the county of Kern? Because there's different resources depending on where you're located. And that's throughout Kern County. Kern County Library, go online. If you're not using their resources and don't have a library card, go through there. You might be able to find some statistical information that you can pull using the Kern County Library system. And they have librarians, research librarians that can help you and step you through that process. How much time do I have? I want to make sure I'm not running close to the end here.
Well, Bill, you have plenty of time. You have 9 minutes, but I have a question.
Sure.
And this has to do with the EIDL program.
Yes.
And the question is, I think a lot of borrowers who have the EIDL, they don't realize the extent of what they have as far as collateral that they pledged. Now, they didn't have to pledge anything, but that position that SBA is in on their EIDL, if the EIDL is over $25,000, can be significant when they want to borrow again. Can you address that, how they need to look at that and how they need to prepare that if they want to do future financing?
Well, usually there's what they call a UCC filing. And that can be, a lot of times the bank will file it within the county of where that borrower is and with the state of California. So you could actually go onto the state of California website and first of all, you can check your legal name if you're registered with the state. And as for UCC filing, I know we had a subscriber that we would pull those up. So it'll show that filing that the SBA would have had for that EIDL loan. So you need to be aware of that. And so if you're coming to a bank, they've got a first lien position with that collateral, however they worded that. It could be furniture, fixtures, inventory, and receivables, kind of a blanket. So check that, and then if that EIDL loan is paid off, then that should be released. And there are times where there are hiccups where the UCCs from a financial institution may not be terminated, that's been paid in full. So we will go back, I've had to go back and get that taken care of in the past.
So as a follow-up to that, do you see many borrowers are going to have a problem with, since the SBA is in the first position, they are in that position when that date of that filing was made.
Correct.
So if I want another loan later on and SBA is already there, SBA is probably not going to say, oh, we'll go in the second or third position and subordinate.
Correct.
So that's one reason to get a bigger EIDL, right?
Yes. Yes, it is. And I will say this, that if you're going to be applying for the bank, they're going to look at your current financials that you're preparing. Rule of thumb is for a very small business loan, and I'm talking by small under $250,000, maybe 2 years of tax returns, business and personal. And this includes any owner of the business that has a 20% ownership or more. That's kind of a standard, but check with your local bank. And if you don't know who your bank lender is and you've been depositing there for a number of years, you need to make that introduction sooner than later because there may be a time. I know last year, a lot of bank customers that deposited with their local bank never had the need to borrow, maybe 75%, but they've been in business a long time. But now they had to go through with the application process. So that was new for them. They just, they've been in business long enough that they had the cash flow that didn't need a bank loan. But this was a lifeline with PP&P for various industries here. And some were hit very severely.
Okay, next question, Bill. I got questions for you. Sorry.
Great.
I don't get a banker here every day. What do you see the biggest need that is out there for a product in Kern County? Being a banker, and I'm sure you've had plenty of applications even before, the pandemic relief programs. People would come in and want a small business loan, and it's just hard for banks to do. What are some of those situations that you see? Yeah.
The startups are extremely hard because, again, what is your credit? What's that, capacity to repay a loan? So what's your net worth on your personal financial statement? And a lot of borrowers, and I've talked about this as an option to look at as you're trying to grow. Right now, if you've got a lot of equity in your home, maybe you want to consider refinancing it and maybe actually lower the rate of your existing 15 or 20 or 30-year home mortgage where you've got equity that you can pull out. And as I was mentioning, if you look at any of the major companies on Google, the lending trees, the Rocket Mortgages, just to see what those rates are. And then you could pull out that equity, keep it on a 30-year to start with. There's no prepayment penalty if you want to prepay that mortgage down. But rates are historical low on the residential side, so that might be a source of funding for you to have. Again, you've got hard collateral there. You've got real estate. And the one person that I spoke with says, gosh, this is 1% lower than I'm paying now on my 30-year fix, and I need $50,000 extra. And I know based upon looking at a valuation, I've got at least 100,000 equity. So it's a lot cheaper than trying to do it by credit card over time or a floating rate line of credit. home equity, which has a floor. Most of them have a floor, could be 4%, maybe higher. And it floats. So if interest rates start to go up 18 months, 2 years from now, that line of credit's going to go up. But that's still cheaper than a credit card in most cases. Okay.
Okay, let's go back. And some of these are PPP related questions and EIDL related questions, but we did say we'd circle back. But here's a good one for you, Bill. Is an EIDL loan exempted from a bankruptcy discharge?
I would think it would not be exempt from a bankruptcy discharge. It's a good question, but that's my opinion. I'd have to research that further.
So on that, you think a bankruptcy would be able to discharge an EIDL loan from it?
Possibly.
Yeah,
Good, very good question.
Yeah, that's one we haven't heard.
We haven't heard of that one.
Okay. Has anything been done to help people that were kind of stuck in the middle of the PPP sole prop issue? And that is, a lot of the sole props in January had different rules than the ones they had in March. There has really been no traction or any interest in order to do anything like that I have heard of. And as we moved on from March, I don't really see much of that happening. Can I revise my PPP forgiveness application after submission? I submitted before the rule changes and my ratios were not in compliance with the 60-40 split. I have been paying on the loan, so can I submit under the new rules and guidelines? Now, I don't know for sure, but my thinking is once you've applied, you've applied. I think last year we were talking about this during the early application of PPP in order to make sure you get it right and make sure you take your time on it, because I don't believe there's a process to go back. But you know what? Things change, as you know, we have things that changed from last week. So that could be something that has changed and could change with this new rollout today. And maybe with the new rollout, they might allow that. My guess is that it's pretty much like, I think I've said this a few times, that these are great programs for procrastinators these days, because the longer you wait, it just gets better and better. And this could be, unfortunately, an example of that.
And I would just add to that, Kelly, that when PPP first started, there was a lot of changes going in. I know the banks were having to do webinars, attend them, and then also do training, to the staff of all the documentation you needed, and then the forgiveness. So as these things are going to, I would definitely see if you can make a change on that application.
The next question, the individual applied last April 2020, received funds in June. So that started your 24-week covered period. So if you go from June, whatever, to add 167 days to that date, and that'll tell you the end of your covered period. And then 10 months out from that would tell you the day your PPP application is due. So originally went through Lindio, and then Cabbage took over for servicing. You started with forgiveness back in 2020. They said new forms would be coming out. Well, new forms are coming out today. So some things, the more things change, the more they stay the same. Told to wait until you get the new form. You've checked several times. They tell you to be patient. I understand it's very difficult to be patient. First thing you need to do is figure out what that date is. And then what you need to do is you need to get on the phone and you need to tell them that your application is due. The good thing is that you haven't received a bill, so you haven't had to pay anything. And if it's 100% forgiven, you want to get that thing forgiven before you have to make a payment. A little worried that there could be some sort of scam going on. Bill, have you heard of anything? Have you heard of these loans being sold in the secondary market where some people are doing servicing on other things?
I'm not aware of that. I would just be, if you're dealing with the company online, just do your due diligence, because you're giving all of your confidential information out there to someone to look at. So, And you can, sometimes you do a Google search on something like this and see if there's some other posting somewhere that, confirm or deny what you're hearing out there with these various companies and fintechs.
So a couple things here. One, those were two pretty reputable firms, I believe. Cabbage for sure. It's not unusual for originators to sell loans and have other people service them. And I wouldn't be surprised if there's been several of those instances that have happened with PPP loans. So that doesn't really kind of throw my crap detector ringing too much. The fact that they're waiting, they could be kind of like we addressed earlier, they could be small lenders that were kind of trying to figure out how they're going to deal with now all these forgiveness. And it sounds like the SBA today is bailing them out. So the SBA through this portal, if they agree to go through it, and if they don't know how they're going to or how they were going to do all this, then and Cabbage is now servicing, I would think you're pretty good. What I would do is I would figure out what your date is that it is due, and that's 10 months from the end of your covered period. So 167 days from when your loan was funded, plus 167. That's 24 weeks, and then go 10 months from that date. And that's the due date of your loan. If it was in June, you aren't there yet, but you're getting close. So do that, go and check on that, and then check and say your loan's getting due soon. With what's happening today might change things really quickly for you now. I think this, what we're talking about today with the SBA portal, I believe they hope to have it online sometime next week. So, and you would be notified by either SBA in an email or by your servicing company or by both, or you're being notified by Bill and I today, but you will be notified. Okay, let's see. Any other questions here? If you have a question in Spanish, why don't you email it to me and I can get that answered for you a little bit better. Okay, anything in the chat that we've missed? Okay, for the program, just to make sure I'm clear, let me clarify that. The program, it is for loans of $150,000 and less. And again, the two programs that SBA announced today, one of them, which is the forgiveness portal. And there's more information in the chat that Maureen has put in. There's more to increase the size of your EIDL. But on my slide that stated loan is greater than 150, I believe is if you cannot participate and you have to go directly through your lender. So if you're over 150, this is not for you. This is only for those 150 and under, and there's two components of it. One, to go through the forgiveness process, the forgiveness portal, and one is to see if there is a different method that can be used for valuing if you need to actually provide the 25% reduction documentation, which was essential on a second draw loan. Okay, I hope that makes it a little more clear. Getting back to our question of the day, had a few receive, I know people that have received some from some of these smaller banks. It should state on your promissory note that you signed who funded you. So that's going to be your bank and not your originator. And on your promissory note for PPP, it will have who actually made that particular loan and signed off on it as well. So hopefully you'll be able to contact the bank, but generally, Bill, if the bank makes that loan, if I'm, say, Kelly FinTech, and I get 20 people come in here and I get them and I'm saying, well, I don't have any money, I'm going to send them to this bank over here, then that bank is going to own that paper now. That bank owns that. The bank that has that note owns that loan.
Yes. And I know the PPPs that the bank had done, their names on it. It's on the documentation. They were the lender.
Yeah, thank you for that. Okay, scrolling down and down and down and up and over, and we're done. Bill, thanks so much for joining me.
Thank you. Been a pleasure, Kelly.
Great to have a banker in here. Somebody who knows what they're talking about rather than me. So that's a wrap on number 72. That's really not on that picture there, really not Kelly Bearden. I'm over here. But that is Bill Jeffries. And Bill, thank you for joining us. We'll be back next week with number 73. So we'll see you then with more details on what is being announced on the portal. We'll see you. Everybody have a great week. Bye-bye, everyone.